Hi, welcome to the Capital Region Skinny from the Greater Capital Association of Realtors, where we dig into the most recent numbers from our market.
Values that drive our citizens every day.
You may have noticed some noise lately about where the market is heading. Some accounts are optimistic, while others, well, aren't. Needless to say, they can't all ring true. The good news is that local data provides a more reliable tone than national soundbites can offer. When it comes to hearing the market's true message, it may not necessarily be from the usual indicators, it may not be heard evenly across all segments, and it may arrive in disjointed bursts. In fact, some of those hidden signals may be audible right now. Let's listen. Pending sales increased 17% from June 2010 to arrive at 758 for the month. That means more consumers were both willing and qualified to enter into purchase agreements. Despite the sales gains, sellers have brought slightly more supply onto the market over the year than buyers could absorb. Therefore, inventory levels increased 0.6% to 8,941 units. Prices were mostly stable, but dipped slightly from last year at this time. This reflects a combination of the mix of homes that closed during the month, as well as some lingering demand effects from last year's tax credit that continued to stimulate the market. The median sales price was down 0.5% since June 2010 to $190,000. Movements that small suggest stabilization. Many people are keeping a close eye on seller concessions. As the market tides begin to turn, sellers can expect to receive more and more of their asking price. For now, percent of original list price received at sale was down 1.8% to 92.4 for the month. That means the market slightly favored buyers. On the national front, the interest rate dropped to 4.88% on a 30-year fixed conventional and 4.52% for FHA. The unemployment rate inched up to 9.2%, though initial unemployment claims continued to fall. Most people share a common view of the economy. Growth is far weaker than it should be, but is likely to improve over the next 12 months. Debt ceiling negotiations and other background noises also persist. Prolonged job growth is still the missing verse in the recovery song. That's the Capital Region Skinny for this month. Check back next month for the latest.